So I'll go to the other sheet. So when you add all these up, the tax software does all this for you. It will bring the loss to the front of the 1040. So in this case, it was showing a loss of 23,000. All right. Not all of it will show up a loss, but most cases you get a loss because of the depreciation component of it. Now, let's just say you have your business income. So if you have a coaching business or whatever business you have, it could be $5,000 profit. It depends. If you're one person LLC, it will be here. If it's your sole proprietor, it will be here. But if you are some sort of like S corp or partnership, and all those will come on here. So it depends. But the bottom line is, I want to show you your income again. You have any of these income, unemployment, social security, you name any sources that you have, most of them will be reduced by this 23,000. Your total income is going to be 81,000, and that is what you're going to be paying the taxes on. All right. So that's the tax benefit of having a real estate investment. Again, it doesn't have to be a big property. You can start with a very small property, and then you can build it up gradually as you go along. All right. So the strategy of getting started with this from accounting perspective is that I want you to say you try, and hold on, I don't know what this is. Okay. So you can try to say put money on the side from your paycheck. So you do gradually put money on the side, and then you can start with a small, like I said, just a one bedroom one, and as time goes on, you'll be able to invest in a 2-bedroom, and then you keep building up. And as the portfolio builds, you can sell it and then use it to get, say, a 6-apartment complex. And then gradually you're going to grow your lead on that one. So that's my take on that. So again, start with a small condominium and then gradually use the cash flow, because when you are doing this, when you, let's see here, as you're doing this, the cash flow that you're getting from here, you'll be able to use that cash flow, since you're not going to need it for the depreciation, and that's the phantom, like a sunk cost. That's another term. You'll be able to use that cash flow to put down on a new unit and then get it going. My thing to you is that try as best as you can to get involved with a bookkeeper or an accountant to help you. When you first do it, don't overextend yourself. So if the property is, say, 200,000, you can put down the minimum that they need. Don't put more cash flow than they really need. And then make sure you have a cash reserve, so that when the tenant doesn't pay the rent, you will be able to pay the rent until you find another tenant. That's what most people didn't do in the crash. They overextended themselves and they had no cash reserves to keep up the mortgage payment when they didn't have any tenants. So my little bit advice to you is, do not overextend yourself, and you will be able to weather any downturn if it comes to that. All right. Now, I'm not sure about other states when it comes to LLC series, but here in Illinois, we have it in such a way that if you have rental properties, you will be able to do the series LLC. The series LLC does is that each property can have its own LLC, and then but it's a series of them. So something like, I think it's gone down how multiple series in there will be in its own unit. The advantages is that if somebody sues you, they can only get money that is in that one unit. So if you have one unit and a tenant falls and they sue you, they can only get just what is in that LLC for that particular property. And so that's where I advise most people to do the series. Now, somebody was asking about the C corporation. Now, you could do that, but it gets a little bit complicated. It depends if you really want it out of your tax return. You don't want it on your personal tax ball game, and I'm to please consult with a local attorney or CPA to guide you. My job here is to just open your eyes to the possibility of an investment using real estate investment to take advantage of the tax system. The tax code is set up in such a way that they want to encourage people to invest in real estate so that people can have a decent housing. So people will not be homeless, and so that's the reason why they make the tax system in that way, so that most people will do real estate investments. All right, so you can get a piece of the pie. Why not?